What's good, guys? You're on Fininvest, and today we'll find out why the stock market is down. Having a look at our investment of $96.90, it has fallen by 6%, which is quite huge. If we have a look right here, this is the fall. And it's not only SQ2, it has been companies like Nvidia. If we have a look across the year, actually, if we have a look in just 5 days, it has been almost, actually, not almost, it is a 10% fall right here, which is even worse than Block. And if we have a look at other companies such as Apple, there has been also a massive fall just in the past 5 days. Though for Apple, it has been only 3%. And we're going to answer why so. So if we look at the company financials, nothing has changed if once it loads. Let's look at cash flow. Nothing's changed. The company statistics are all the same. By the way, I just found out that you can see all the financial information, all the statements up on Moomoo, which is quite nice, so I don't have to research as much. Though I'll still keep on researching from the Block website. Now, if we ever look at the 5-year maximum, in reality, what has been happening isn't scary, because in reality, all of this is pretty linear if we look across the year. See? So it's just market volatility. It's nothing much. Market does go up and down, so we shouldn't make our financial decisions just based off what market is doing today, because in the long term, the stock is probably going to grow because the financials of the company are great, and there's no way down, because the lowest the company has been was at $60, and that was when the company hasn't been making money. So there is no possible reason why it would go down to $60. So I see this as the bottom of the stock. It might go to $90, but I don't think it'll break through the $90 price. And afterwards, it will probably go up, because here the company was overvalued indeed, right over here. But if we have a look now, the company is at a perfect spot, and once the economy as a whole recovers, it will go up. All right, now we're going to find out why the stocks are falling. So the simple answer is the US economy is bad. Not just US economy, the world economy as a whole. As analysts thought it would recover much quicker than it currently is, and us realizing through the many statistics which are being posted now, the market is becoming skeptical of the growth because it's too low for the current recovery, and thus a lot of investments have been pulled out. And this is seen through this article. If we scroll down on Tuesday, now don't look at this data now, it's a little bit out of date because I did read this article about 2 days ago, but I'm just trying to get a point across that Dow Jones Industrial Average, which is obviously an American index, has fell by 600 points, which is very important to understand, because what happened in the American market has influenced the ASX, the Australian Securities Exchange, which is interesting because the American market, as we all know, opens at about 12 p.m. up till 4 a.m. during the night in Australia. So I was asleep while all this has been going on, and in the morning I didn't have enough foresight to see what will happen to the ASX because I haven't checked the market in America, which is just interesting and important to keep in mind for all of you who do invest from Australia, that America does matter and matters way more than you think. Now, also what's very important, at least for me, because my investment is SQ2, the Block, it is mostly an American-based company, even though it is listed on the ASX. It's also listed on a bunch of other stock exchanges, so it doesn't matter. But about 90% of its sales happen in the US. So whatever happens in America is very important, at least for my investment. Now, just to keep in mind, very interesting information right now, VIX Index Fund. Right now it's minus 13%, but at the end of the video, I'll talk about it. It's very important information for all of you investors, and I'm glad I found out just now about it. Now, what's the reason behind such poor growth? So if we have a look at the Atlanta Federal Reserve's GDP tracker, they have reduced the expected growth for the United States from 2.5% to 2%. So they consider the United States economy is recovering slower than we thought previously. Now, what's the reason behind this? Well, mostly the poor manufacturing data. So let's accept the cookies, it's fine. Now, if we have a look down here, This is the report that has been released on 3rd of September, which has caused the fall in most markets. The economic activity in the manufacturing sector contracted in August for the fifth consecutive month. So, for 5 months straight, the US manufacturing has been decreasing. Well, what's interesting is the report for August has seen a tiny increase. Overall, it has been a negative trend for the whole of 5 months. We can see it in data here. By the way, I'll leave this information up in the description so you can have a better look because I'm just quickly jumping across it. But just the main point is some really smart people had a look and they said, damn, the manufacturing is actually down. So US is producing less, which obviously means that the economy is getting worse. So manufacturing PMI, just quickly, so we all know it's a bit of a lesson as well. It's a purchasing managers index, which if it opens there, an index that measures the month over month change in economic activity within the manufacturing sector. So the change in manufacturing is decreasing, which obviously means that manufacturing as a whole is decreasing. I know it sounds a little bit weird, but the main point is less goods are produced within the United States, which means the economy is worse, which means at the end of the day, our company, which does financial services, will do less financial services because there's less money within the economy, because less goods are produced, which is the main reason why at least our stock has been falling, but also most of the stocks have been falling. Companies like Nvidia, firstly, they are a manufacturer, which already means that it affects them directly, their manufacturing statistics, but also the decrease in economy means that customers are poorer and Nvidia's product is very expensive because it is high-tech chips and stuff like that, which means that they're going to have less sales. And most companies like that are affected by this statistic, which is important again to keep in mind as well that reports like these give us insight into how market will react. Lastly, what is US going to do about its growth? And most importantly, what are we going to do about US's, well, not growth, the decrease in growth? So firstly, there has been a meeting for the Federal Reserve of the United States, and there has been agreement about decrease. Actually, it's not an agreement, but basically everybody is expecting a rate cut of about 25 basis points, which is very important because that's a change in policy. So now battling inflation is not the priority for the United States, and instead it's to recover the economy, recover the manufacturing sector, and so on. Now, what are we going to do about it? And that's why I come with VIX. So now it's too late, but what I should have known is VIX is actually an index that goes against the S&P 500. So, well, I'm a little bit on the way, but if we have a look right here, you can see this is 2008. We all know what happened in 2008. This is the COVID. This is the pandemic. We all know what happened during the pandemic. And you see these huge spikes, and that's actually because in those times the S&P 500 has fallen quite a lot. And what's interesting is during the Tuesday fall, actually, this VIX index has actually increased by 12%, which is huge, to be honest. And this is very important for if we want to be all round traders, we do have to keep in mind that we can profit off poor economy. Not ethical, but it does make money.